created a very lazy way of investing. But if I have to create a generational wealth, around 90% of my actually wealth is it. See, the problem with macro is I have this private company portfolio where I've taken VC kind of approach that gives me, I've invested in stocks which have gone up by 20, 25, 30% a day. The company actually became 10 bagger from there on. So it was a massive loss for me. The underlying business is doing well, cash coming in the company came below the cash level. As I told you, most of my mistakes, I could actually track it back to sort of segregate this money in three pots. So it's the control of your time that's the really crux of it all.
In this second video of Vikrant, we are going to go deep into multiple topics. Where first video, we were discussing at overview level. If you haven't seen the video, the link is in the description. In this video, we'll deep dive on the management quality assessment, on his overall portfolio, how it looks like, what is his overall process, his learnings from mistakes, and how his lazy way is generating wealth for him. We have one ultimate question also waiting till the end. So do watch the video till the end. If I conclude it, I would say now, of course, earlier you were looking at valuation, but now your first point of identifying a stock is your surrounding, the network that you've already built, and a bit of your own basic analysis whenever, as and when you get time. And then once you get it, you just pick a few of those just to filter them out. But before that, on the management, if that management quality is known, it makes a big difference. How do you work around this?
So there are two problems here, right? One is how do you define quality, and second is then how do you then evaluate a management, right, against those parameters. Now, my going in position is, Archit, that everyone is an honest person. Okay, who am I to judge them? Of course, you know that there are certain promoters who have already taken certain steps to harm the small investors. I of course stay away from them. But in general, I would say people are running a business for an honest reason, right? They want to create wealth for themselves, for the investors. They want to contribute in the growth of the economy and so on and so forth. So unless they take an action where I get a sense that it's probably not favoring the small investors, I would stay away. Now, what are those steps? Now you could look at, hey, management gave a forecast and they could not achieve it. That's fine with me. We are not living in a static world. It's a world where there are so many things that can go wrong. Okay. Now, if the management take action, in fact, this happened a few days back, right? What's the company name? Maple is MapMy India. Sorry, I'm not invested in that company, MapMy India, right? The promoter decided to actually separate out the consumer business, and the company would actually invest in that company, right? And in that promoter's company, it would be a completely separate business. Why would you do that, right? It's something that I would not like to. I would not appreciate, and I would not like to work with such management. So I think it's very, again, how do you really judge a management based on the decision they have taken? It also depends on the person, right? Because there are investors who I know, their going in position is everyone is a chore, right? And then you look at every action from that lens. I look every action from the lens that everybody is honest, unless they do something that can harm the investors, minority investors, right? So there could be multiple reasons for me to judge a management for being not honest, but I would look at their action and take that call.
And do you also see changes in macro resulting in changing in your portfolio?
I would love to do that, Archit. I would really love to do that. I don't think I have the bandwidth. See, the problem with macro is it's not just some work that you do once in a month, right? It's something that you have to sort of look at on a daily basis. So RBI has reduced the cash reserve ratio today. Banks will have liquidity available with them. Now, what are banks going to do with that liquidity? Will they, our sort of conclusion would be banks would go and lend more. They would probably reduce the cost of borrowing, and that should trigger the growth. But because I've worked in a bank, I know there are so many other factors that go into it, right? It's not a one-to-one relationship, right? So if I want to follow that signal, I then need to be aware of multiple factors that can
Factors.
affect the action of a bank. And I don't think we would be able to really do that analysis quickly, right? There's something happening in Japan, Korea, Europe, US. It's good to be aware because you sound smart, right? But the point is, from an actionable insight perspective, it would require you to do a lot more work.
Indeed.
Unfortunately, I don't think I understand a lot of that. Further, I don't have time, right? I think most of your viewers would be in my kind of situation where they have other
True.
responsibilities, right? They can't make this
Exactly.
as their full-time job.
Have you ever felt that there's a dent in your portfolio because of not
Could
following the macro side of it?
yes, right. It does, right? So I think it becomes extremely difficult to really analyze these things. So see, what I've started doing is, Archit, I analyze the company, I listen to the management, right? And that's how I take a call. There are factors that are of course not in our control at all, right? But I can't even factor that in my investment thesis, so I don't really worry about them. Okay, I just listen to the management and take a call basis there.
But I found something very interesting. It's a conscious decision. I think it must be bringing peace here for you. You have identified the good balance, and it's perfectly fine. I'm ready to take hit, provided I'll keep churning my portfolio based on my own analysis, my own thesis. And of course, never going to be 100. I wish it was for you. I haven't ever met anyone who says my portfolio was always 100% right decisions. Yeah?
No, no,
I
that
doubt if Rakesh will also say it.
I wish. But see, actually, I tell you one more thing, and I think this is a very important um, factor when you are looking at sort of developing your own methodology to invest. I think you need to understand what game are you playing. Okay, so if you are a trader, you are playing a very short term game. It's a zero sum game. The skill that you require, the toolkit that you require for that is very different. Once you become a long term investor, when you are sort of with the business for a really long period of time, a lot of things change, right? Then you also start to give a lot more leeway to the management. Now when I'm buying, I would be quite strict about buying. I mean, I would take a small position as mentioned, but increasing the position, I have a very strict criteria. But let's say I've bought a company, and after that, there is something that goes wrong. I will not just go and sell just because the business has not done well for that 1 quarter or 2 quarters, right? If I could understand the reason, I know that this is sort of a temporary phenomena, I would sort of stick around, right? So I think some of these things are extremely important. Um, and from my perspective, I've realized that you are in this game to make money, but more than that, you are in the game to have a peaceful life, right? And I think that's extremely important. So you have to also change the way you are investing. So I realize long-term investing, the probability of losing money is actually quite low if you think about it, right? Of course, subject to buying at reasonably good valuation, buying a reasonably good business. Again, not difficult to do. Holding it for a fair period of time, monitoring it. Again, not really difficult to do. And then selling. Now, selling you can make mistakes, really tough, but I think it's fine if people are slightly aware of the valuation and the underlying business and other things. They should be able to sell it at reasonable kind of levels, and they should be okay. And let's not regret about that later on, right? You'll have a really peaceful and a wealthy life. I think also what happens when you have a reasonably sized portfolio, what I mentioned to you, right? Staying wealthy is quite difficult as well. You require a very different mindset for that. You have to be paranoid, to stay wealthy. You can't go bankrupt, right? I mean, I believe there is no good return, no amount of good return that you could justify for getting ruined, right? You don't want to get ruined. You want to stay in the game for as long as possible.
Exactly.
And if you are staying in the game and just following the process, I bet you'll make reasonably good amount of money. I think people underestimate some of these things. Just stay there, keep on following the process that you have developed for your own self, right? After listening to everyone, and I assure you, if you take rational decisions, you will do good enough in life.
I'm very happy that my back-to-back podcasts I've done. Previous one was with Ashutosh Sharma, and both of you eventually are saying, "Stay focused, keep doing what you're doing." And when it's boring way of making money is real real way of making money. Don't look for the exciting areas. It's about how you are focusing on your process, on your system, and sticking to your process for the consistency. I have one more question on strategy. I know it's dragging a bit, but it is very interesting area and the core area of investing, right? It's about, you said once, it's I sell in one go. Does it mean that irrespective of the size of the company in your portfolio, when you say sell in one go, is everything out of that whole stock gone away? Are you referring to that, or
Yeah, everything out, right away, or maybe in couple of branches, right? At times it's also difficult because I have, let's say, a few accounts, right? So I might be in middle of work, so I can't really go log into every account. So, but fundamentally, what I'm saying is, once I've made
fundamentally?
up my
Yeah.
mind, I want to exit, I'll probably exit it right away.
Thank
But
you.
actually, going back to the point that you're
Yeah.
making, boring way of making money. See, I have this private company portfolio where I've taken VC kind of approach that gives me enough excitement, but that's around 5% of my overall portfolio, and that's the optionality that I've created. That in case one of those companies become massive in future, good for me, right? And even if all those go bankrupt, as I mentioned to you, I won't be ruined, right? I'm still in the game. I am not really aggressively building that portfolio. Is something that I started because I thought, I mean, I've got contacts, I've learned certain skills over a period of time, and I could probably work with these startup businesses. But I think it's not easy. Also, because I moved to London, it's again difficult to remain in touch with the management. But that's the portfolio that I have, which is around 5%. Incrementally, my investments are of course in stocks in India, and now of course in overseas markets as well.
Can you share your, in the percentage term, how your whole investment is divided across different type of asset classes?
I think close to well, I have to do some math, but fundamentally, I think for me
I
right now, around 90% of my actually wealth is in stocks. Okay, 5% is PF and some of these other savings, and then 4 to 5% is kind of liquid that is available to me. Of the stock investment that I have, I mean, I moved to London last year, so there is a very interesting vehicle here through which you can invest, and any capital gain, dividend, or interest gain you earn, it's not taxed for a certain amount of that investment. It's called ISA. If your viewers are interested, they could read about it. I wish Indian government proposes something similar.
I was
It's really
going to say
interesting.
that.
It's really interesting because there I could invest up to £20,000 under ISA in stocks, and government can't claim a single penny from my gains, which is great.
Wow.
Anyway, so that portfolio is still small. I think the portfolio is close to, I think of that 90%, around 4 to 5% is right now in primarily in US equities. And these stocks that I've invested in US are the stocks and the sectors which I cannot take exposure in Indian markets. So these are biotech companies, gene editing companies,
Okay.
chip manufacturers, so those kind of plays, which are of course quite risky. But I am still trying to understand US markets. They are very volatile. There's no circuit breaker. I've invested in stocks which have gone up by 20, 25, 30% a day, which have gone down by 30% a day. So it kind of makes you feel very different. In India, I think somewhere regulator has tried to
Circuits. Yeah.
safeguard the shareholders
Investment.
in some ways. But in US, it's a true capitalist country, and any news needs to get discounted right away. So you don't know, right? Tomorrow you wake up, your wealth may be down by 20%, right? So then you will start thinking about risk management a lot more.
True. I think when you say 90% and you're saying risk management, I was going to ask you, someone who's coming from a banking background, coming from a finance background, 90% of stock, have you ever thought around the debt side or not at all?
No,
How
no,
would you manage your debt?
I see, Archit. I tell you one thing. If thankfully I don't have any liability, so to say. It's kind of luxury for me. I know many of you viewers would have to take care of their
Yeah.
families. In my case, I, my wife, we are earning. We just have one daughter, right? We have a house in where my family stays. My mom, dad. We were comfortable, really. So I don't have to think about risk management too much. I mean, it doesn't matter to me even if my portfolio goes down by 10-15% tomorrow, right? It won't change the way we live our life, right? So that allows me to invest aggressively. Why I'm saying aggressively is actually not aggressive investing. If I can just sort of also nuance that a little bit. See, these are the stocks that I have been invested in for last many of them. I've been invested for last 4, 5, 6 years, right? So I know the businesses in and out. Therefore, what may look risky to you may not be risky for me, right? So I think it's also the way you look at it.
True.
But but if I have to create a generational wealth, Archit, this is the only way I can do it, right? If I go to debt, I mean, I won't create a generational wealth. I'll probably make 5, 10, 15% more, right? I mean, yes, it's good money, but is it going to change my life? Probably not. And therefore, I have stuck to equities for now. Generally, I look at mid cap, small cap, mid cap companies. I've stayed away from SMEs. I did invest in SMEs before COVID. I thought, this is an interesting segment, but I just found it I just could not really get enough information about the business to take a call. That's one. And I realized that there are things that go around in those kind of stocks, and I don't want to be part of that. I'm not saying all the SME stocks are bad. It's just that I can't really derive comfort,
Your
and
decision.
therefore I've stayed away. So I generally stick to small caps, mid caps, and I think I've generated reasonably good returns over the last 10 years. So I'm quite happy with my playbook so far.
Vikrant, we heard you have taken a conscious decision of one not to pick, what to pick. Very good. But still, what is your daily routine? You identified 21 stocks and you're working with VCs, you're working with the overseas companies. So these three areas, 90% of your value into the stocks. What is your daily routine? You have a small kid at home. How do you manage with office work? Because most of the audience that we have, those people who are actually doing full time jobs and then balancing it out with the family.
Well, I mean, one, you don't need to analyze or monitor these businesses on a daily basis. You are not trading. You don't have to monitor positions really. You could just open your portfolio on weekends and just see what has happened, right? It's not difficult really. You probably just have to spend a few hours. Also, I think it's also important to appreciate that you will never know 100% about any business. Heck, even the management doesn't know everything about their own business, right? So who are we? So
True.
somewhere I think you should appreciate that there will always be data points which you would not be aware of. Even if you are aware of, what will you do with that, right? So I think you need to probably have that kind of balance where you remain sane, and you invest money at the same time, right? You can't become insane just because you are following up these companies literally on a daily basis. But I think for me personally, what I do is, as I said, I have these companies in my watch list on Screener. So any update comes over there, end of the day, it takes me not more than 10 minutes. End of the day, I'll just go through the updates on Screener. And if there is anything interesting that comes, I just open that up, just go through what that update is, right? And that's about it, right? So there would be some companies where I have not invested in, but I'm tracking, who are in my watch list, right? For example, there are three companies in my watch list where management actually bought bunch of their own stocks last week. Decent stock sizes, right? These are not small amounts, right? Sometimes management kind of buys very small just to give that indication.
Yeah,
Hey, we are buying. See,
we are fine.
stock is cheap, but these are, you could see that they are actually coming forward and actually buying decent chunk. That means they clearly see that the business
They see
should do
value
well
add.
in future, and therefore I should go and read a little more about that business. Now what's happening, right? Is there any update in last month or so? I mean, management buying cannot just be the one reason for you to again go and buy, but that becomes a really important tool, right? So I have around, I think, 40 50 companies in my watch list. Keep on adding, keep on removing across sectors. Just go through that watch list, update on screener, and read about it. That's all I do. And then, of course, there is a fair bit of work that we'll have to do on the quarter ends after the company's results, because there you have to probably go and read the presentation, listen to the investor call, and then again, use that input in your existing knowledge base of that company, right? It's not much of work really, Archit. I mean, as I said, I work. I also try to work out if that's possible. Um, but I believe I have created a very lazy way of actually investing. So far, it has worked. I hope it continues to work, because it's really tough to actually devote time beyond a point on stocks. Right?
But I think I was writing it down. So it's a proper process that you've created, right? You look at it daily, 10 minutes. You go on monthly to understand the basics, how it's going on, add or delete. On quarterly, you go and check their reports. So it's a proper system that you have established. Let's talk a little bit on technology side. So Vikrant, any specific technology, any tool that you use for your investing?
I don't think you need too much of technology, right? The only thing that I really use is Screener. Um, and of course, Mittal Brothers have done a great job. Is a great tool.
Yeah.
That's the only tool that I use. I don't use anything else. One thing I would like to use, however, is actually use ChatGPT to analyze these annual reports
Ah.
and these lengthy reports. So instead of sort of reading through them, if you can get a quick summary, I think that would be good. Um, but again, it's fine. See, if I have to read an investor call, how long would it take? Right, it will take you 10 minutes. That's fine. I mean, we can all spare 10 minutes. That's not an issue as such. So yeah, I mean, I don't use anything else really. And again, I also stay away from these new age brokers. I have always I got hit by Carvi issue, a few years back, if you remember. And there on the
Yeah.
learning was, just stay safe. So I've stuck to these bank-owned broking companies for my investments.
Coming to the next section where we're talking about learnings from the mistakes, the biggest loss that you faced, and the learnings that you've taken from them.
Right. So my biggest loss was actually in a small IT company. I lost like 30-40% in that, and it's not the loss per se. When I sold, is the company actually became 10 bagger from there on. So it was a massive loss for me. It was a fairly small company when I invested. The company was actually around. And I think at the time the market cap was, this is before COVID, market cap was around 55 crores. So this was the holding company that was listed. They had an operating entity in US. It's a tech company, as I mentioned, and they were generating a lot of cash, right? And you could see that after a year or so, the cash donation would basically take the cash levels to around 35-40 crores or so, right? I mean, it was a very simple story for me that the underlying business is doing well. You're seeing cash coming in the company. I bought it at a level, as I told you, during COVID, it actually became like one third. It came below the cash level. Um, I stayed there. The stock moved up, but I kind of exited it because I was really frustrated with what happened during COVID time, and that company became 10 bagger from there on. So I think somewhere one of the biggest learning for me was to, what I also alluded to, sell for a reason. Don't sell for the sake of it, for the valuation, just for valuation, or don't sell because you are frustrated holding it. I mean, there should be a reason why you're holding the business, right? And then there's no point of being frustrated with that. I think that was one massive learning for me. Another one from tech is not that I just invest in tech companies. It's a tech product company, and the stock became like around two and a half, three bagger for me. And there's very interesting story around this. I actually told one of my friend to also buy when I bought the company. He asked me what to buy. I told this what I'm buying, and he bought that company. So I looked at the valuation. It was fairly expensive. I said you can't justify this kind of valuation under the sun. So I sold that. I forgot to tell him, and that stock became like 5 times even from those levels. So I think one of the biggest learning for me, as I told you, most of my mistakes, I could actually track it back to selling more than anything else. See, if you buy, maximum loss you could have is 100%. It can come down to zero,
Yeah.
right? If you sell for not a good reason, and if the stock becomes 5, 10 times, you will lose a lot more. So I'm not saying that don't sell at all. Of course, you need to sell the business when, as I told you, one, your buying thesis is not valid, right? Or if you're selling it based on valuation, that's fine. This is a personal choice. I have decided not to do that. But if somebody says no, valuation is important criteria, it should be yes, please sell, right? Or corporate governance issues, but that's again quite subjective, right? What do you perceive as not good corporate governance may not be the same for me, right? So, but again, whatever your criteria is, just write it down somewhere and just follow that. And after that, then don't regret it, right? My biggest mistakes have been in selling, actually.
What you're saying is looking great, but the point is, majority of us have the same problem of patience. Yes, you're right that I have a thesis, I decided a thesis, but the point is how much I have the conviction on that thesis. If
Exactly.
I can see it's going 30, 40, 50, 60% down, I might say, oh, maybe my thesis is wrong. This is the one wrong decision which I took, and you come out of it, and eventually it turns around. So I think it becomes quite challenging because I think it happened with me. It happens with everyone, right?
So Archit,
But
their positioning also becomes an important point, right? So if let's say my position in that stock was reasonable. Let's say you decide to buy 20 stocks, 5% each, theoretically saying, right? Now, even if the stock goes down, it won't really affect your overall portfolio too much, right? But if that stock is let's say 20-25% of your portfolio, and if the stock becomes half, that would affect you. So I think it becomes very important to actually manage your positions as well. Now, in my case, it always gets skewed because there would be these 2 or 3 stocks that will end up doing extremely well. But I don't sell just because they have become 10, 15, 20% of my portfolio. Because at the end of the day, it is those 20, 30% stocks that you own will actually move the needle for you, right? So therefore, you can't just sell base evaluation and the position size. Having said that, that again is a factor of your conviction, as you rightly said. You need to know why you are holding that stock. You need to have that faith in the business, and then stick around, right? So I think see, these are very difficult questions, Archit, and honestly, none of us have one right answer for it, and there can not be a one right answer. Otherwise, the market won't exist, right? There are different people with different theses, different approaches. I think one needs to find what is the right approach. I think what we can do is we can of course talk about our own frameworks, and then people can sort of figure out a way of creating their own framework around buying, around holding, around selling.
an advice for 20-year-old Vikrant, what will be your earnings?
Yeah, I probably would start quite early in life, right? For started the investing journey quite early. I waited quite late in the day, so probably that's one learning or one advice I would give. I think compounding is actually the eighth wonder of the world, and the early you start, early you would see those benefits of compounding. I think that's one advice. The second advice would, of course, be probably enjoy a little more than what I did. It's not that I did not really, holiday, or I did not really splurge money. I did sometimes, but I think it's very important that, the money that you are earning today,
Right.
you know, there is a part of money that should work for you in future, right? So you invest that money. There's a part of money that you need today to sustain, and then there's part of money that you need today to enjoy your life. So I think you need to have Pro-
Balance.
Probably sort of segregate this money in three pots, and then use those pots quite judiciously. So this is probably the second advice I would give to my own self.
You talked about I kept buying, I sell on bulk and sell in one go. It requires patience. And of course, there are a few mistakes, but there are a lot many learnings and positives because of which you are here. Is the patience is a key, is part of your personal trait as usual, or you have developed that patience specifically for the stock market? If you go out of the stock market, if you go home, your daughter, your family, you go office, they see a same Vikrant with patience and calmness, or you have to
No,
cultivate it.
I'm actually a very calm person. I think it's a good thing. I think it's a very important trait for an investor.
I agree.
So yeah, I mean, I don't get angry. I generally don't shout.
Wow.
And somewhere that also kind of reflects in your own style of investing, right?
Yeah.
If there's a mistake, you own the mistake, you move on. You don't say, "Arey, management was a chore," or somebody gave me this tip, but probably did not tell me everything about it. What could go wrong in future. I mean, you can't blame the whole world for your own mistakes, right? You have to own those mistakes and then move on in life. I think that also gives you some kind of fulfillment about this whole process. See, actually, one thing we need to understand is we are not entrepreneurs, right? It's not that we are creating massive number of jobs. Yes, we are investing capital in companies, and companies are creating jobs, but that's a very indirect and
Yeah.
insignificant contribution to the process. Entrepreneurs actually create much more. Business people actually create much more value for the ecosystem, for the country, right? We're not doing that. So somewhere I think we should
True.
be humble about it. That we have been really lucky to be able to invest in Indian stocks in 2020s, which should be a golden decade for the country. Last 10, 15 years, of course, have done quite well. And I
Yeah.
truly believe that, for next few years, Indian markets will do well. But I think we should also be aware of the fact that, the Chinese markets peaked in 2003 or 2004, and probably just, I don't know whether right now they're below that level or just touched that level. Something similar happened in Japanese markets, right? So once you have these melt ups for a fair bit of time, you also have this decades of underperformance, right? So probably we are a lucky generation in that sense. We are working in good companies because country has done well, these businesses have flourished, and we got jobs, we are making decent money. Be humble about it. We are getting the opportunity to invest that money, right? Be humble about it. We are damn lucky, right? Future generations may not be as lucky as we are. So I think humility, calmness, ability to live within yourself, these are really, really important traits for an investor.
It's very different, but I would say very powerful view to look at it, which is very rare. I'm sure the audience over here will really like it. Most of us are earning to make the life easy, eventually doing everything to be happy. And I say Vikrant is happy.
One, the only thing I'm unhappy about is the weather here. But I think you're right. If you have the deficiency of money would bring unhappiness, uh, but if you have money, it doesn't necessarily mean that you'll be happy. I believe if I have the flexibility and control of my time, I will be a happy and a satisfied person. And I think that's the purpose. You have sufficient wealth, sufficient buffer for you to do things that you really enjoy doing, right? So it's the control of your time that's the really crux of it all,
Exactly.
right? So I would be extremely happy if I wake up one day and say, I don't want to probably open my laptop and probably go for a track, right? And I don't have to take permission from anyone, right?
Yeah,
That's a good
that's the
thing. Well,
beautiful area
so I
indeed.
think I think yeah. So it really depends on everyone. But I think control your time, enjoy your life. You'll be a happy and satisfied person, really.
Thank you very much for watching the video, and don't close before sharing it with others. Thank you.